we're shooting across your bow. Here comes the Prime Minister, actually the Queen of Canada, Justin Trudeau, just had a press conference where he's going to broadside some tariffs back. So, wow. Look at that sell-off. Dow down about 250. I think 300 at its lowest. The Russell's starting to implode here. We have a bear call spread on the Russell. This thing's going to get uglier before it gets better. But let's cover a quick strategic brief. Kind of weird to see Mike Pompeo, our Secretary of State, sitting across the table from this general, who was the head of North Korean military intelligence. This dude is a brutal murderer. It's nuts. But if you want world peace or at least the denuclearization or potentially peace on the Korean Peninsula, you got to sit across the table from these type of actors. So we'll see. The on again, off again summit. I think something's going to get done, and we had a great discussion today in our Analyze Your Trade and debrief about potentially getting long FXI at this point. I think something's going to get done between the president and cream of some young guy, and we've been seeing a lot of calmness in the Chinese market, even with this potential trade war and stuff like that. Here's one of the reasons we see a lot of calmness. Let me pull this one over here. You ready? That calm Chinese stock market, it's engineered by the government. This shouldn't be breaking news to you. I mean, if you've been a member here at TGO for a while, back when they had their essentially, let's call it their 2009, right? Their market implosion, their financial crisis. The government at one point rounded up 200 financial reporters and threw them in jail because of their bearish articles. You couldn't close positions. You had to open only. They ordered all the sovereign wealth funds to buy. I mean, you want to talk about engineering a stock market, bottoming out. The Chinese did it. So, the Chinese macro data ain't essentially lighting the world on fire. If GDP is essentially flat, we saw retail sales a couple weeks ago. But if you want some, maybe Captain Kirk, boldly go where nobody's going right now, it might be China. However, obviously, U.S. tariffs prompt anger and retaliation from allies. I think Justin Trudeau just kind of held his hands out and kind of flopped them around a little bit back at the president here. I'm waiting for this. The EU said what? And Jean-Claude Juncker, the EU bloc's executive, said what? Absolutely unacceptable. And in a couple hours, we're gonna fire a broadside back. So this little bit of a rebound in the Russell that we're seeing in the overall market, I wouldn't. You got to be pretty brave to be stepping in right here as a buyer, thinking this thing's bottomed out. This is a dead cat bounce. The EU is going to fire back at us, and this market's heading lower, folks. Thank God yesterday, or not thank God, thank the fact that we talked about this. I said it is time to get long VIX calls. That little bit of a relief rally yesterday, I said ain't going to live. This is a dead cat bounce. It's a little bit of a short squeeze relief rally. We're heading back down to the 50-day moving average. So this is not good. Mexico responded. Canada's responding. The EU is going to blast. We haven't heard back from China yet, and China's going to blast pretty hard. What's going on other than that, Mrs. Lincoln? How was the play? We got Iran out there, folks. We got U.S. sanctions kicking in 3 to 6 months on that. As with friends like this, who needs enemies? Iran plotting with U.S. allies to do what? To get around the president's new sanctions. Thanks, France, Great Britain, and all of our other buddies. So, I get the president's America First strategy. It's what? The Iranians certainly don't give a shit about Israel and the United States. They care about what? Iran. France should care about France. England should care about England. But at the end of the day, man, it's a very, very interesting strategic picture right now. We got bearish. We just did our, like I said, our Analyze Your Trade and debrief session. We just put another bear call spread on ExxonMobil up here at the 82.5 strike. We closed one last week for a day profit, a one-day profit of what was it, 11, 12, or $1,500, whatever it was. 75% gain profit in a day last week. Sat on our hands as it got bullish, or had a little bit of a rally with the oil. OPEC and oil is another. We have a June 22nd OPEC meeting. We're going to get bullish next week. We're going to take a look at some XLE calls and also getting bullish on ExxonMobil. Russia in the next couple weeks is going to tell OPEC to pack sand, and they're going to be done. And when that happens, the XLE is going to see a massive pop. So if you want to be early, maybe take a look at getting long some XLE calls. I think that we're going to maybe pause today and over the weekend, and then the XLE is going to head higher. So oil's out there as a potential issue. Brazil, the trucking strike is over. I think things are starting to move. This is also another potential Captain Kirk trade sitting out here. I said on Tuesday, after we saw this huge gap down, I said, give me a day or two to see if the all clear is sound. This ain't a short squeeze, folks. This is people starting to step in and say, all right, I think the worst is over here. I'd look to get long the EWZ here out to Jan 20. But all of this stuff sounds a little scary, doesn't it? But at the end of the day, what are you going to do? As global growth loses steam, we're the best house in a bad neighborhood. U.S. investors find what? There's no place like home. That's why I describe whether it's the China trade with FXI or the Brazil trade with EWZ, those are Captain Kirk trades, man. If in your portfolio, you should potentially have a Captain Kirk trade. 5 or 6 solid sectors, right? A services, financial, a tech, a sin stock, an energy. But you should have one of them just hanging out there like, you know what, this thing's getting beat up right now. Let me take a look at it. So, but still, in a bad neighborhood, we're the best house here. Dow Industrial's real after we imposed tariffs. I've been beating this drum for months, folks. There's there's the initial Trump. Hey, we're 1, 2, 3, 4. I declare a trade war. Here's, it's not going to be that bad. The adults will figure it out. Here's the, oh my God, it could be that bad. And then for a month and a half, I've been telling TGO members, or I've been asking them, where is Steve Mnuchin? Where's Larry Kudlow? And where's, what's his name? Wilbur Ross. You didn't hear boo out of those people. They were working behind closed doors to maybe do what? Work out some sort of nice trade deal and we can all Rodney King and get along. You didn't hear boo, and that's when I started to get nervous, was like, hey guys, if you haven't heard anything out of these folks, that means it ain't going well. To the point of Tuesday, us saying, you know what, we're going to blast $50 billion at you in tariffs on June 15th. Whoa. So my strategic mindset that I said was what? Neutral to cautiously bearish. We're heading back down to this 50-day moving average, folks. I really don't see too much to the bullish case to the upside here. Tesla, Model S crashes into parked cars after it started on its own. Good news out of Tesla there. Jamie Dimon of JP Morgan, our finance stock, oh, that's another sector you need to be in, made $28 million in 2017. Not too shabby. Anything else I need to brief? No, that's about it. Obviously, the biggest thing on the flight schedule tomorrow, aside from this trade war, is non-farm payroll, the unemployment rate, and average hourly earnings. This is what I think the market goes lower on tomorrow. If this is a miss, if average hourly earnings are flat to down, that means, yay, we're making jobs, but people ain't making money, man, or making more money. That'll be bearish tomorrow. So I think the EU is going to fire back after hours or sometime tomorrow. I think our futures are going to get kicked in the teeth, and I think pre-market, I'm not looking at these two numbers tomorrow. The unemployment rate, can it go lower? Sure, yay, but the Federal Reserve, Jerome Powell has said, hey, man, we're at full employment. Hold on, Wiz, that isn't at 0. It's 3.9. Folks, no matter what you do to some people in this country, hey, I got a job for you. I'd rather sit on the couch and eat Cheetos and get paid to do it by the government. We are at full employment, folks. There is no physically, way possible everybody wants a job in this country who can get it. So we are literally at full employment. I think we'll see a solid 200-ish plus or minus on this. So these numbers aren't going to move the market. It's average hourly earnings. And if anything, I don't see an explosion to the upside in average hourly earnings. I think it's either flat to down. And like I said, the EU, people are, writing up a press release right now. The Justin Trudeau press conference was a little comical. We're still talking, and can't we all get along? It's going to be interesting to see how this plays out, folks. But either way, have some VIX calls in your filing cabinet, sitting there as a hedge. Wow, VIX is up 5% right now. So yesterday we looked at getting long some VIX calls out a couple weeks, and those things are already looking pretty good, up $400 or $500 in a day. So looking good. All right, folks, I got to run. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and I'll see you tomorrow for Friday's market.